the only thing that matters when you are an investor or a trader is, hey, am I going to have more money from this stock or less money from this stock? My name is Christopher Uhl. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now let's get into the lesson of the day. All right, so stick around to see how we rank this video out of 10, and subscribe if you haven't done so already. So this video is called SoFi is about to squeeze short sellers on January 27th. This is coming from the Stock Goat channel. Now, we've covered lots of videos from Kyle in the past. I'll give you a couple heads ups. First off, Kyle, I really appreciate the fact that you come with lots of receipts. You definitely do your research on SoFi, and I think you do, honestly, a very good job of promoting the stock. With that being said, I definitely would consider adding some risk exposure to your portfolio here, right? If I'm 100% invested in anything, that makes me really nervous. And I don't know if you are. I don't know if you, the audience, are watching this are, but I would definitely have some risk parameters associated with SoFi. In fact, in the last video, I actually went through and showed where I would get in and where I would get out of SoFi if I were trading it, which I'm not. So I'm looking at this completely objectively, but curious to see what Kyle has to say. I mean, SoFi has been popping off recently on YouTube. So just curious to see what Kyle has to say.
Guys, it's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock. Today was the day we have been waiting for. The big, massive inflation CPI report has come out. And also we got multiple bank earnings. And today was the dream case scenario, guys. We literally got everything we wanted, okay? We had the light CPI report on top of blowout bank earnings. This is a dream case scenario that has just happened. And we are literally 12 days away from the SoFi earnings. So things are aligning perfectly. The SoFi management team has put this earnings perfect timing, and there's a chance that we could literally be around the $16 level heading into the earnings report. And we also have about 12% short interest.
Oh, legit. We're at 1592 as of right now. I mean, he definitely is right about that. And SoFi did have a huge move. I think it was 7% just a couple days ago, leading up into earnings. Now, listen, I really do like to trade stocks that are leading up into earnings. And we've seen the trend turn, right? We've seen the trend. What is the word I'm trying to say? We've seen the trend bend, right? The trend is your friend until it bends around this level right here, around December 6th. And we're now at the same level we were on November 25th. So it's definitely traded sideways for a minute, 32 trading days right there. But the trend looks like it might be continuing to go back up at this point. But I would really caution, right? Set those risk parameters ahead of time, because this move right here looks almost identical to this market cycle guide right here, right? This hope, optimism, belief, thrill, euphoria looks a lot like that right there. And then coming into this, you've got large overhead resistance with this order block that was created back in 2021, I believe. And every time, well, maybe not every time, but a lot of times when order blocks are sitting up there, you're going to see it get rejected, okay? So even if it has blowout earnings, it still might have an issue with this order block. These are large institutional orders waiting to be filled. So I'm cautiously bullish on SoFi, not entirely ready to call it and say it's going to the moon, like Kyle does here, but I'm cautiously bullish on this. And yeah, my stance changed. And that's the great thing about being a trader or an investor, right? Is that you can be agile, you can be dynamic. In fact, I saw somebody a couple days ago who's like, hey, genius, how's those moving averages working out for you? And it's like, bro, like, they go one way and then they go the other. Like, it happens, right? That doesn't mean you're going to catch the exact top or exact bottom. But I will say right here, right, we saw a really ugly 21% move down, okay? And we're up from that point about 17%. So here's the way that math works, right? A 21% move down takes a 26% move back up to get back to break even right there. So just so you know. Now let's go back to Kyle here.
This is enough short interest to really get the stock moving if we have a blowout 2025 guidance. So the massive volatility has finally cleared, and I'm telling you right now, clear skies are on the horizon. You had
Oh, Kyle, don't be so bullish, dude. I mean, have a little bit of objectivity, Kyle. because like, let's do this. So since you brought up volatility, this is how I measure volatility in the ATR, the average true range over X number of periods. So I use the default, which is 14. So the volatility went from about 32 or so cents for an average true range of 14 periods. And then as it grew, that went up to 66 and then 74, then 85. So still, volatility is still very elevated, right? You can look at this level down here where it's around 30 cents or so to this level right here, which is around 80 cents. And you can see the difference right there, right? The volatility, how it's expanded, it's nearly tripled. I would not say that volatility has gone away just yet. I also wouldn't say there's clear skies, because you literally have this order block sitting right here, right? And I mean, I don't want to be the guy who makes a video that says, I told you about this order block as it comes back down. It could happen, right? I mean, I have no skin in this game whatsoever. I don't care if it goes up or if it goes down.
Management continuously saying, hey, 2025 is going to be wind at our backs. This is the year we've been waiting for. And I'm telling you right now, SoFi is going to shock Wall Street in about 12 days. We're going to be live streaming that earnings. So be sure to subscribe to the channel. It's going to be an absolutely insane live stream. I want to see like 3,000 people on that live. And guys, we also had a cherry on top today. Another bullish analyst on Wall Street coming out, a 5-star analyst, top one.
Yeah, I actually just made a video on this yesterday. So be sure you go watch that one. I think he came out with a $35 price target, which was like 120% move from where it is right now.
100 out of 10,000 analysts. He's giving the highest price target out of every analyst on Wall Street, shattering the $19 price target from Jefferies, shattering the $18 Citibank price target we just got yesterday. So guys, this was the dream case scenario today. God must be watching over, because it looks like we are heading to the moon pretty soon. Things are looking very, very great.
This makes me so nervous, Kyle. Like, the excitement in your voice makes me really nervous. Now, this goes back to trader psychology, right? When you're this excited about a trade, you're going to lose objectivity, right? If it turns around and goes against you, which it did, I mean, it went down 20%. And then now it's starting to come back up, right? You lose objectivity when you get emotionally invested in a stock. And that just makes me nervous for any of the SoFi shareholders who feel this strongly.
Great. And I'm telling you right now, you're going to enjoy this video. So be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be keeping you updated daily. Let's get into the video. All right, guys, I'm filming this video at about 2 o'clock. We got about 2 more hours to the close. And you can see the CPI report was about 8:30 right here, guys. And you can see we're up a little bit, 2%. And then boom, guys, we got the good news on the CPI report, a little bit lighter than expected, a little bit of a sell-off, maybe some traders. And then guys, right here, we got the price target upgrade that we're going to be covering for you today, guys. And you can see that's getting us moving again. So literally up almost 6%, 2 hours into the close. This is what we've been waiting for, guys. We still have about 12 days left. There's a possibility we could be heading into this earnings report at the $16 level. This could be a massive gap up into the mid $20 level, heading into February. And you can see I'm following about 160 growth stocks right now. Not many growth stocks red. We'll just go up to the higher levels to see what's going on in the overall market. You got PayPal and Palantir up 3%, very solid.
I really like looking at this particular map. I think it's a little bit more useful than that one there. You can see everything more at a glance. You can just like Google FinViz stock market map. So this is for today, so it's not all that much, but we could look over the last week. And the market, I mean, it's kind of mixed, right? You got a couple spots that are really peaking up, like in the financial sector over here. And then energy down here. But overall across the board, I'd say it's pretty mixed.
Rocket Lab up 4%, CrowdStrike 4, Nubank 4, Affirm 4. Affirm was smoking us early on in the day, guys, and we just blew past them. Move up a little bit. Lending Club 5, and SoFi is in the top 25 out of 160 stocks we're watching. We would like a little bit of a bigger move, but just look at what the bank earnings are doing, guys. Look at this. Wells Fargo is literally up 7.5%, and Citibank is up 7%. So even the legacy banks are moving like crazy. So guys, we finished in the top 25. I'm pretty happy. Robinhood up 9%, Upstart up 10. We're going to get our big day pretty soon, guys. We got to wait until this earnings report. We got a lot of short interest on our back. I think we're going to break through these shorts pretty soon. And here it is, guys. Very, very simple. Core CPI rises less than forecast as inflation pressures ease slightly in December. We're not going to cover this, too much. You heard what Peter Lynch says, don't waste too much time, on macro, but you guys can see we got what we wanted. We're mooning. So this was a great report. This is what we were waiting for. Take a look at bank earnings, guys. This was also what I told you guys to look out for today. Same day as the CPI report. Goldman Sachs, JP Morgan crushed views into lieu of bank earnings. BlackRock stock gains after Q4 earnings beat tops off record year for net inflows. BlackRock firing on all cylinders. Oh my God, banks are crushing. JP Morgan net income jumps 50% to more than $14 billion in the final quarter of 2024. Oh my God, Goldman Sachs fourth quarter profit surges 105% year over year. And here you guys can see it, top and bottom line beat for Citibank. We believe there's a possibility that Citibank is going to sign with the Galileo tech platform. Right now, we know that they're a top 5 bank, and SoFi's been an R.
All right, so since you brought up everything across the board, let's go to XLF and let's take a look at the sector here, at the financial sector here in Outlier. We don't have SoFi in our database yet. It doesn't have enough trading periods to include it yet. But if I zoom in over here on XLF on the sector, one thing to keep in mind is that the sector got really, really greedy around early December. We had that sell signal come through, and then it's fallen into the fear area, but it's also flatlined on fear. Now, the way that I trade is I'm looking for if I'm going long, I'm looking for the greed to continue higher, right? So at this point right here, I would never go long on anything if the greed is starting to contract. Now, the opposite's true as well on the fear side. If I'm looking to go long and the stock is in the fearful area, and that has flattened out and is starting to go and change direction, start to go more towards the greedy area, I'm interested, right? So this has definitely flattened out. So this sell signal may reverse into a buy signal here in the near future. And in fact, if we look at the constituent map over here, hang on, let me let it load. Over on the right hand side, you see that chart that just loaded in, right? That shows how many stocks are fearful or greedy in this sector as of today. And it's 230 financial stocks are showing fearful. 78 are showing greedy. So we still don't have a full consensus in market breadth, or I'm sorry, in sector breadth in this area of things moving from fear to greed, but it looks like it may have flattened out. In fact, this this chart down here is this chart, right, where it shows the fear and greed for each individual period, right? So fear and greed for this sector for that period right there over time. And the yellow line, which is a little bit difficult to see right there, is the average of those periods, and it's continuing to go down. So I would be interested to see when this starts going back up, we start to see more greed come into the market, especially in the financial sector, because we did just come off such a greedy area going into the fearful area, and we still haven't seen a full consensus on that yet. So just something to be aware of.
RFP stages for the past 2 years with a top 5 bank. And Citi right now, 5 banks, there's a 20% chance we're going to land this one. But it looks like, the stars are aligning because, we had some, data come in from a couple of years ago, seeing Citi, on some of our, data headlines with Technisys. Things are looking really good for a potential, Citi deal. All right, guys, and take a look at this. Breaking news. We got the SoFi website traffic that just came out a couple of days ago for December. This is always about 2 weeks delayed. SoFi website traffic re-accelerated in December, plus 6% month over.
Okay, I got to tell you, if this is a stat that you're looking up, Kyle, I'm really impressed. This is the most impressive thing I've seen. How deep you can, what is what I'm thinking of? How deep you can look at all the different metrics to come up with something. Looking at website traffic change period over period, I'm actually impressed. That's a level of depth of analysis I wasn't expecting.
Per month to finalize Q4, tied for the third highest website traffic in company history, 16.5 million. Q4 total traffic matched Q3 perfectly, where SoFi did a record 6.3 billion in originations.
When do you ever hear this on like Apple or Amazon or Google? I've never heard this stat before. This is
Q3
cool.
Total traffic 48.4 million. Q4 total traffic 48.5 million. So you hear a lot of people talking about seasonality, a slowdown in Q4. Guys, we literally had more traffic than Q3. So it looks like SoFi is continuing to market. They want more users to the platform. Probably going to also hit record members. So just scroll down a little bit, guys. You can see we had that dip in November, and then boom, just a big uptick to finalize the year, guys. Q4 is going to be a blowout. I'm telling you right now, guys, I'm very excited. And we got more great news for you guys. Breaking news: William Blair, analyst Andrew Jeffries initiates coverage on SoFi with an outperform rating. Price target is currently unknown because they don't cover the price targets, on these, tip ranks and news sites. But look at this, guys. More context. This analyst used to work at Truist, and he had a $14 price target 10 months ago. Guys, this is a 5-star analyst, top 100 out of 9,300 analysts on Wall Street. This guy knows what he's talking about. I'm telling you right now, he just obliterated the price target. He just put it out in his, summary, and we got that right here on Data Driven Investing's Twitter. So guys, take a look. The $19 and $18 price targets from Jeffries and Citibank have been shattered. William Blair, 5-star top 100 analyst Andrew Jeffrey gives $26 base case price target in a bull case scenario 12 months out would lead to $35. So guys,
that is really aggressive. Like I say, base case of 26 is really aggressive. That's a $10 move up from where it is right now.
At 40.
And base case, right? I don't know if you're familiar with like all these different scenarios. But base case meaning nothing changes. Base case meaning as of how things stand today, this is how we expect it to go, right? Base case of 26 is really aggressive to me. That's how much is that? Base case move up 65% with no changes. I don't know. I mean, I don't know what I'm talking about. I'm just giving my perspective on it. So I'm curious to see how this plays out.
$45 price target. I said my bull case scenario, it's starting to get closer. And this is before he's seen the Q4 report, the Q1, the Q2, the Q3 for 2025, guys. So things are looking pretty solid right now. This price target is most likely going to go up a lot over the next, 4 quarters. So you guys can see what he's pricing is price target on. He's going off of 2026 EBITDA right now. Our base case is that SoFi will drive meaningful multiple expansion, perhaps driving its current rough 23x estimates, trailing EBITDA multiple forward on 2026 projections at 23x estimated 2026 EBITDA. SoFi would trade at $26, offering nearly 90% upside. In a more bullish view, we cite a 10-year free cash flow return on invested capital analysis discussed below, which implies a $35 12-month stock price, guys. Absolutely insane. This absolutely shatters the $18 and $19 price targets. This is coming before the Q4 earnings. We've got 12 days out, guys. This could not be a better present. And you can see the SoFi stock is reacting very good today. Top 25 today out of 160 growth stocks. There's nothing to complain about, guys. This is the dream case scenario with CPI report, bank earnings, and also you got a cherry on top, price target upgrade. And here we go, guys. We got a little bit of a marketing headline, guys. Take a look. I watched TGL last night. It was awesome, guys. I love to see Tiger Woods play, even though they got smashed. We have increased viewership for TGL. 2025 is going to be big. Look at this, guys. The second TGL match averaged 1.3 million viewers on ESPN, up 14% from the inaugural TGL event, and more than the Duke versus Miami.
Okay. I don't know what TGL is. What is TGL? Let me know in the comments. I don't watch sports at all. Like legitimately, I don't even know who's playing in the Super Bowl. I didn't know who was playing in the Super Bowl last year. I thought it was like Taylor Swift's boyfriend. That's about all I know about sports. But I'm assuming this has something to do with SoFi. I see this picture right here. I guess that's Tiger Woods. I see a little SoFi logo right above him right there. I don't, and this is something Kyle mentioned on a previous video. There was like a stadium or something where they were going to have advertisements at the stadium. I don't put a lot of credence in that, right? I personally don't feel like that's going to move anything. And remember, at the end of the day, only price pays. Okay. Doesn't matter how great fundamentals are. It doesn't matter how much advertising is going on. The only thing that matters when you are an investor or a trader is, hey, am I going to have more money from this stock or less money from this stock? Right. So he's definitely built up a very strong bullish case here.
Men's basketball game. Look at this, guys. Up 14% versus the first match. 1.3 million average viewership. Total unique reach 4 million. 25% versus the first TGL match. So marketing is looking awesome for this TGL, guys. It looks like it's going to be a great investment if we continue to see, around 1.5 million viewership. Hopefully more people continue to talk about it and we can break into the 2 millions potentially in the next couple of months. So it looks like we're going to have some blowout, Q1 guidance, full year 2025, guys. I'm very excited. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. Once again, we're going to continue to keep you updated.
So yeah, clearly he's like the world's biggest bull on SoFi. I am cautiously bullish at this point. That's my takeaway as of right now. If I were to trade this, which I'm not, but I'm telling you, if I were to trade this, I would give it about 2.5% to figure out if it is or isn't going to work. You can see my breakdown on that on the previous video that I did. But yeah, just you've got this overhead resistance right here. That makes me nervous. And of course, the excitement and emotionality that people get also makes me really nervous. But do me a favor, in the chat, give me your video ranking. I'd like to hear. Honestly, this is the best video that I've seen from Kyle so far. It really is. I would give this a nobody gets a 7. He's not getting an 8. I would give this either a 5 or 6. So I'm gonna put it at a 5.5. I would give this a 5.5, which is a huge improvement because I believe I've given him 2s before. So Kyle, you're really improving. I really appreciate what you're doing right there. Right. I would just say, of course, keep risk in mind. Right. Don't just get so emotionally involved in a stock that you lose objectivity. Right. That's one of the big things in one of my all-time favorite trading books is Trading in the Zone. Trading in the Zone by Mark Douglas. There is so much wisdom in this book. If you have a moment to spend $10 on Amazon or whatever, get that. This is so worth it. And one of the things he talks about, in fact, dude, this is a nice little quote card here. Anything can happen in the market. Okay, I'll pop this open. Let's go. Open image in new tab. Yeah. Okay. Here we go. Anything can happen in the market. You don't need to know what's going to happen to make money. Now, what does he mean by that? Meaning, like, you can get in, you can just test it and see, right? And if you're wrong, cut your loss and move out. If you're right, hold it. You don't actually have to know what's going to happen to make money. Okay. That doesn't mean on every stock, on every trade, you're going to make money. But on overall, if you keep your risk tight and let your winners run, you should be all right. There's a random distribution between wins and losses for any given set of variables that define an edge. I love that quote. It's a pretty deep quote. But imagine you put on a trade today in SoFi. You buy SoFi and it goes up, right? And so you get that confidence and you're like, oh, God, I'm going to buy AMD. And AMD has been in like the most obvious downturn of all time. And you're like, but I bought SoFi and it went up. If I buy AMD, it has to go up too, right? There's a random distribution between wins and losses, and no trade that you put on has any impact unless you're moving the market. No trade you put on is going to have any impact on any future trade. And that's what number 5 is right here. Every moment in the market is unique, right? So you have 5 winners in a row. That 6th one could absolutely be a winner or a loser, but that 6th one has absolutely no reason to be a winner or loser based on the last 5. You didn't make the 6th one work. Okay. You didn't do that. The market either moved in your direction or didn't. But number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another, right? And so when you become a trader, you become an investor, you find your own style of trading. An edge is what you can mathematically say over time, right? So over the last year, I had 100 trades, and of those 100 trades, I made 20%. And so my edge in that case would be, however that averages out over each one, right? But that doesn't mean that every single trade is going to be a winner. Doesn't mean every single trade is going to be a loser. You got to figure out where that edge is and where that lies for you. And of course, always trade risk first. So like I say, tell me what you're trading in the chat. I'm very ignorant on SoFi, so I'd really like to know everything you know about SoFi, and come back tomorrow, or we're going to help you save time, make money, and start winning with less risk together as a team here in the Outlier Trading Room.